The Fed printed out of thin air $10,700 for every person in the United States. It's created an asset bubble, but that wealth effect only happens in the top 10%.
Please join us for our next live stream Sunday, February the 2nd at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, February the 2nd, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, guys, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We really do appreciate your support. Our return guest today is Charles Hugh Smith, prolific author and editor of Two Minds blog. Charles's writings have been republished on prominent websites such as Zero Hedge, Financial Sense, and David Stockman's Contra Corner. And we're delighted to have him here today again as a return guest. Good day, Charles, and welcome back to SBTV. How are you doing?
Great. Very pleased to be on the program.
Oh, we're glad to have you back. I know you're just coming off that the WTF with Mike Maloney and Chris Martinson and those guys. How was that experience?
It was interesting to be on a panel of people that I respect and who know more than I do about energy and the financial markets. So it was a learning experience for me too.
Yeah, it's a great program. I enjoyed watching it. Super team of guys. No, thank you. Appreciate it. Charles, I'll start off by saying that I read one of your recent articles. No matter how much money the Fed prints, we still can't afford to have nice things. And in this article, you pointed out that after the trillions printed by the Fed in 2008, nice things are even more out of reach. So I'll start by asking why the trillions of dollars printed did not trickle down to the real economy, and where did it go?
Yeah, that's a great question, Patrick, and I think it's at the very heart of why people are increasingly dissatisfied with their lot in life and with the status quo. So just to kind of put some context around it, the Fed printed out of thin air $10,700 for every person in the United States, all 330 million Americans. And yet, did they get even a fraction of that 10,700 in their own personal lives? And the answer is, of course, no. What they did see was stagnating wages for the bottom 95% and higher prices, especially for big ticket items such as housing, rent, healthcare, and higher education. And I don't think it's unique to the U.S. only. When we look at the fringe protests and so on, we see people complaining about their pensions aren't keeping up with expenses, and I think we can see wages aren't keeping up with expenses everywhere. So you go, well, wait a minute, wasn't this supposed to fix the economy, but printing $4 trillion and pumping it into the financial sector? And so what most people don't understand is that money just went into the top of the wealth power pyramid, right? The banks and the corporations and the financiers, they're the ones who got access to all that money. And what they did was they used it to buy other assets to generate more income, so they got richer. And so the trickle down theory is, well, the banks get the money and then they loan it to people to buy cars and start businesses and build factories. But when we look at the numbers, we see, wow, productivity is kind of weak. Productivity is not growing, so businesses aren't getting any. If they are investing, they're not getting much return for their investment. And industrial production's down. And the only thing we see growth in really is consumer spending, but that's based on debt. And so that's not really a plus to the economy to be dependent on debt. So trickle down has failed, and I think it goes right to the heart of the problem of the banking sector is getting all the money, and then it's not really flowing into the real economy. It's being used for speculation.
Yeah, I hear you. Hey, before we go on, I just wanted to let the viewers know the first time we had Charles on, he was in Hawaii, and I'm also from Hawaii, and and he wore his nice Hawaiian shirt, and I didn't. So this time around, I promised Charles I would wear a Hawaiian shirt. So that's why we're suited up similarly this time around. um,
Yeah.
yeah,
Yeah.
yeah, just to keep everyone abreast. But Charles, if the rich were the greatest beneficiaries of the printed money, and the man on the street is not benefiting from it, when they, as you've described in another article, walk their dogs, polish their Mercedes, and tutoring the wealthy's overscheduled kids, does it show a gap between what the Fed thinks theoretically of how the printing money will move in the economy versus the reality?
Right, right. I think it shows an enormous gap. I mean, I think we can think about the Grand Canyon because the Fed is basically believing, at least in their public, pronouncements, that the idea was if we print all this money and boost the stock market and the housing market and basically create another asset bubble, that's going to create a wealth effect. In other words, people are going to feel richer, they're going to spend more money, they're going to borrow more money, and that's going to boost the real economy through spending. But that's a very simplistic picture because the economy depends also on increasing productivity. That's really where wealth comes from, is getting more goods and services out of the same amount of capital and labor and energy, right? And so that requires constant investment and constant risk, right? You got to take risks, you got to boost productivity. That's how societies get wealthier. Well, none of that's trickled down into those things. It's created an asset bubble. But that wealth effect only happens in the top 10% who own most of the stocks and businesses, and rental properties. And so the top 10% have done extremely well, and that's concentrated in the top 5 and the top 1 and the top 0.1. But the bottom 90%, I have not seen any wealth effect because they don't own enough of those assets to make a difference.
Yeah, I think you kind of hit it on the head because this whole wealth effect. Okay, majority of people they don't own stocks, but they see the markets are rising every day, new all-time high every week pretty much, and so that sense of wealth effect even goes into the average Joe's psyche. How dangerous is it for the average Joe who thinks that wealth is, or the economy is doing just fine, and it may start to tempt him to take on loans and go more into debt?
Yeah, Patrick, you've identified a key source of weakness in the whole Fed strategy, which is they're actually increasing the incentives to take risk, right? And then by basically promoting the idea that it's not risky. In other words, the Fed's got your back. The Fed will always push stocks higher. They always push housing higher. So you're right. It's pushing people into taking risk that they're really not capable of managing because they're not financial experts, right? And so we saw this in the 2008-2009 housing bubble, where a lot of people went in buying homes on speculation and so on because they believed the idea that it could only go up and never go down. So yeah, we've created a lot of systemic fragility by promoting and pushing people into risk assets.
Charles, you've also written about cartels in sectors such as healthcare and education, and we touched on that in our first interview. Um, are the actions of the Fed responsible for allowing these cartels to germinate in the first place?
Patrick, I'm really glad you asked this question because it's a question I never see anybody else ask or answer, and yet you're absolutely right on because the mechanism is like this. In the old days, say a generation or two ago, college, there was no student loan system, right? You basically, had to scrimp and save and work your way through or whatever. But colleges and universities couldn't just double the cost of tuition because there would be no buyers, right? It was like beyond what people could afford. Well, when the Fed, starting about 20 years ago, started inflating the money supply and inflating these asset bubbles, they basically said, well, just go borrow money. You don't have to be efficient. And so it allowed the higher education system and healthcare to just basically pass on any kind of cost increases they wanted and then force the customer to borrow the money. And so that was the solution the Fed offered. And of course, the rest of the federal government in the US followed suit. So now we have federally guaranteed student loans and federally guaranteed mortgages. And so those are no longer really private sector. The private sector loans the money, but then they get it guaranteed by the federal government. So it's kind of like the worst of all possible worlds. It's loading the consumers and students and ill people with astounding debts, and then it hasn't forced those cartels to become efficient and respond to price pressure. So there's no competition in those cartels. So it's the worst of all possible worlds, thanks to the Fed.
You've also written that when wages are stagnant and the big ticket costs of living have skyrocketed, it prompts people to borrow money to obtain nice things like a college degree, as we are just talking about. Um, it's a sick joke. I mean, isn't it a sick joke that after being a victim of the Fed, as you're just talking about, which is a money cartel, that the middle class then borrows money to fund their children's college degree, which is also run by these education cartels? I mean, sick joke. Would that be the best way to describe it?
Yeah, it is, Patrick. It's really sad. If you look at the charts, right, and the Federal Reserve publishes these charts, student loan debt went from basically zero to 1.6 trillion or something, and it was like it's a straight line up. And then you think, wait a minute, this is crazy because you're loading students who have no income and they have uncertain future income, right? There's no guarantees for most people that you're going to, unless you're a doctor, that you're going to get a high enough income to pay these loans. And so it's like, what's happened to our society that this is okay? That's another problem. How can this huge divide between those people who have run the banking sector and are collecting all this interest and getting rich off student loans, and the student borrowers who are like facing debts for decades?
Yeah, yeah. I mean, I remember when George, well, we affectionately call him Baby Bush. When it was Baby Bush, I remember he had a Homes for Everyone program, and then we had 2007, 2008 crisis. And then when Obama was in, he was pretty much college for everyone. And now we're seeing this student loan crisis. It seems that whichever way the middle class turns, gutted by cartels. Charles, what other areas do you see cartels running services?
Well, I think those of us in the alternative media, we see the cartels in the internet platforms, right? Google, Facebook, Twitter, and in China, WeChat, and so on. And it's kind of striking when you think back, like even like a decade ago, the internet was more like the Wild West, where everyone had access to a variety of sources through the internet, and now they're all being channeled through these platforms, which now can sort of squelch views that they don't approve of, and they can do it using algorithms and so on that are not public. They're private and obscure, so we don't really know what they're doing behind the scenes. And so I think this has been is creating a lot of problems for society, because you can't really trust that you're getting a full range of opinion and information sources. So that's one cartel, and I think a lot of people are looking at that now and are aware that that's a problem. Of course, at least in the U.S., the defense industry is another cartel, and it's always been a cartel. There's just a handful of defense contractors, and they get away with cost overruns in the billions, and nobody blinks an eye. So if you add up the defense cartel with higher education cartel, the healthcare cartel, and the banking cartel, you've covered about 80% of most people's expenses. That's what the big ticket items are, and so. Yeah, it's and we look ahead and we go, gosh, everyone talks about technology, but we're just not getting any productivity gains from it. It's almost like technology in the sense of cell phone or smartphone addiction and the control of these internet cartels. We're actually seeing a decrease in productivity as people get distracted by their phones and so on. So I'm not sure that we're using the technology gains that we thought would be coming to us through the internet.
Yeah, that's a great answer. Internet. Yeah, we're really seeing that. How do you see this widening inequality gap come to head that we touched on a bit? I mean, are we gonna start to see pitchforks coming out or growing social unrest?
Yeah, I think that's a great question, Patrick. And I think we've already started to see, like in France and Chile and Hong Kong, and that there is social unrest, and it's connected to a sense that we're no longer getting ahead, right, or that we're actually falling behind in our standard of living. But it's also there's also a growing awareness that the majority has been stripped of political power and a voice, right? And so people are starting to respond to that. Like, it's like, not only am I falling behind financially, but I seem to be losing my civil liberties, and those are being suppressed or limited. And so it's all like, so then I can't even take any action, in the political sphere, because I'm basically, my powers have been reduced there. So it's like, in the old way of thinking, if there was an economic problem, you could find a political solution to it. But now that's really not possible. It's just basically the Davos crowd and the political elites kind of telling everybody, well, we'll handle it our way. Don't worry about it, right? But meanwhile, we're all falling behind.
Yeah. In another article, Charles, you wrote that article and you called the Fed evil. Why did you choose that that word evil instead of perhaps misguided or incompetent? I mean, evil does denote that their actions were intentional.
Right. And I think that's the key point, Patrick, is I chose evil because if, as you said, you could just say, well, the Fed stumbled into a bad policy through incompetence or misguided ideas. But the Fed knows, like we all do, that the ownership of all the assets they've pushed higher is concentrated in the top, right? In other words, I'm thinking that I think the numbers are something about 4 or 5% of all households own like 90+% of these assets, right? The top 10% own 90%, but maybe the top 5% own 2/3. So it's really concentrated at the top of the wealth pyramid. And so they know that if every time they push these assets higher, they're only enriching the top few, and they're leaving the rest behind. And so they know this, and so that they keep doing it shows that they're evil. They really don't care about the bottom 90%, and they're just trying to keep their banking buddies glued together, right? And so it's like, I think it is evil, and I think we need to call things by their real name, and so people would would hesitate to say the Federal Reserve is evil, but actually I believe they are, because they know exactly what they're doing, and they continue doing it.
Yeah, I tell you what, Charles, I'm gonna hop on that canoe with you. We're both in the same canoe as far as calling the Fed evil. I appreciate that you actually came out and said that. I don't think most guys would be able to do that. But did the Fed become evil in only recent times, or have they always been evil?
That's a great question, Patrick, and I'm not the expert that other people are about the Fed, but I think we can kind of characterize it in this way. The Fed, came into existence, theoretically at least, as the lender of last resort, because there were panics in the 1890s and in 1907 where the banking sector basically got into a liquidity crisis where people that had borrowed short term, their loans came due, they needed to borrow more money or roll that loan over. And guess what? The banks decided not to loan because they were afraid of defaults and so on. So credit tightened. And that was considered a problem for the economy, because you could trigger a panic that would then cause a depression. And it was all because of a lack of liquidity, right? Short-term borrowing. Right. So the Fed was supposed to be the lender of last resort. And if they had stayed limited to that role, then I think it would have been okay. And I don't think they would have been evil, because their existence was solely to be the lender of last resort in financial panics, which are a standard feature of of advanced capitalism, right? Panics occur, right, because they're based on human emotions and the business cycle and the credit cycle. So, especially in the post-war area, after World War II, the Feds started getting mission creep, if we will, if you want to call it that, where now they were responsible for keeping employment high, unemployment low, inflation low, and then also keeping the banking sector profitable, so the banks could always make money and become larger and serve the economy better. At least that's the theory. But of course, when you get mission creep, then you overextend yourself. And so now the Fed is not just being a lender of last resort; they're managing the entire financial sector. I mean, they're like the repo crisis in September, when short-term money rates started rising because banks were under stress, and it was becoming, like I said, people didn't want to lend money. They were afraid they wouldn't get the money back. Then the Fed has pumped out hundreds of billions of dollars. So they're like totally now entwined and enmeshed in the financial system, and therefore the real economy. And so we're basically dependent on their management. And that's what's scary. And I think because they by trying to take control of these things, they've increased the fragility of the system. It's no longer a decentralized system. It's all top down. So if the Fed makes a miscalculation, the whole thing goes south.
Yeah, I'm really starting to believe we're in a liquidity trap already at this point. Um, that word evil, are is our politicians heading to that same point where we might have to call him evil as well?
I don't know if when you talk to an individual, who's a politician, they're often seems like a reasonable person trying to do good,
Yeah.
that kind of thing. And so I think we might want to say the system is evil,
There you go.
and the system is evil because, at least in the US, it's pay to play, right? Like, you won't be able to win re-election if you don't raise $10 million. And that's if you're just a House of Representatives member. If you're a senator, you got to raise 100 million, And so then you become indebted to people with money. And so, and we all know, to somebody like Jeff Bezos or Bill Gates, that $10 million is nothing. Even 100 million is no big deal. So you can buy all the congressional influence you want for like a relatively modest sum, And so that system is evil, and it's really tough to get around that. And the number of lobbyists in Washington D.C. I think it used to be about 1,000, and now it's something like 40,000. So everybody knows the way to get ahead in corporate America is lobby the government to get you into a cartel or monopoly. Eliminate your competition, and then your profits are guaranteed. But that's incredibly destructive to the society and economy. So in that sense, I think the political system is truly evil.
Charles, there's this quote that goes, permit me to issue and control the money of a nation, and I care not who makes its laws. Can we say that the Fed was created by the elites for the purpose of controlling the money and thereby controlling the populace?
I think that's a very good summary, Patrick. And if we, in U.S. history, if we go back to the late 19th century, and there was like the silver movement, right, which was the idea that the money supply would be increased by the Treasury issuing more silver coinage, and so that would benefit the farmers and small business people who would have, the money supply would increase, so they would have more opportunity to borrow capital and expand their business. And so that, you could say, would have been an organic growth of the money supply that was decentralized, right? And so I think what you're pointing out is that when the money supply is controlled by a handful of people and a handful of banks at the top, then you don't have a decentralized sort of democratic system of money. And so that's what you're saying, is if the money supply and the creation and distribution of money is in the hands of just a few, then they, of course, will fall to the temptation of serving their own interests. ahead of the interests of society and the economy. And that's what we're living in.
Yeah. Do you think the Fed can be reformed, or is it coming closer to that point where we need to end the Fed?
I think if since I've called it evil, I mean, I think it's pretty clear it needs to be abolished. I think for a lot of reasons, and I think we could go back to the idea that that perhaps the U.S. Treasury could fulfill the role of being lender of last resort, and that we don't need a central bank to do that. We could actually use the U.S. Treasury to open lines of credit in a financial panic. And then and we'd get rid of this idea that a handful of people at the top of the pyramid can manage the economy so that unemployment stays low and inflation stays low, and all those markets can be manipulated and controlled by a handful of people. That, I think, has been proven to be either risky or evil, however you want to do it, however you want to describe it. So yeah, I think it's time to end the Fed and fulfill its initial role using a public agency that already exists, like the Treasury.
Yeah, completely agree with you there, Charles. 2020, we're still pretty much just starting. What's your outlook for 2020? I mean, do you see asset bubbles blowing larger, or continued reliance on debt to fund spending and greater risks in the financial system?
Yeah, Patrick, it doesn't seem like anything's changed. And that's where I'm thinking, well, it looks like the same trends you just described will continue. They'll try to push assets higher to create a more wealth effect. And then everybody has to borrow more money to fill the gap between their income and their expenses. But we seem to be running into limits on how much higher you can push assets, right? That they're already at levels that are historically extreme. And people can't afford housing, right? And so the usual trick of the central banks has been to lower interest rates, right? And therefore make it more affordable to borrow more money. But as we see in the European banking system, by pushing rates to negative, they've actually crippled their banking sector, and they've created unsustainable bubbles in housing, like in Scandinavia. So they've realized now they're backing off that. So the idea that you can just save the world by lowering interest rates, that idea has run out of steam. So the central banks don't seem to have any tools left. If you take away that, then what's left? And so for that reason, I think we're reaching diminishing returns. Like the more debt you create, you're not getting the economic growth that you did 20 years ago, 10 years ago, or even 5 years ago. So they're kind of pushing on the string there. And since they don't really have any policies beyond lowering interest rates and funneling more money to the banks, then I think we could see like an end to global growth. And I think this is, global. In other words, the Chinese system is very similar, right? They've created huge amounts of debt, pumped up their banking sector, and it's created a lot of misallocation of capital, a lot of malinvestment, and it's also no longer pushing the growth that they want. So if that policy's run out of steam, then I think we're going to see a retrenchment. In other words, if people aren't going to borrow more money or can't borrow more money, then they're going to spend less, invest less, and we're going to get a slowdown or recession.
Yeah, I think we're getting pretty close to that already. Charles, you've also written about crazy highs in the U.S. stocks juiced by the Fed stimulus, and you shared a chart which you asked how much direct control does the Fed actually have on U.S. stocks. Can you share with us why you say that all the gains from not QE, 60 billion a month, have already been front run?
Yeah, thank you for the question. And I think when we talk about front running, what we mean is if you're a hedge fund, or a big institutional investor, and the Fed announces they're going to, create more money and distribute it into the financial sector, then you're going to go, wow, that's going to push stocks higher because that's what it's done for a decade, right? So you start buying very aggressively, right? And, so you're front running the Fed. You're not even waiting for the Fed's money to reach you or anybody else, and you're not going to see if it works in a month or two. You're buying right now, and then everybody else sees the stocks going up, so they start buying. And so it's like the Fed's, the actual mechanism of the Fed's money going into the stock market is not the reason why stocks are soaring. It's everybody's anticipating that. And so if you push that much money into the stock market and everybody front runs it, you get all the gains that used to come from the Fed stimulating, the financial sector. You get them all right up front because everybody is front running, and so the game is to front run the front runners. In other words, you've got to buy early and aggressively in order to pick up the gains as everybody behind you starts front running too. So with the stock market up, whatever it's up 10, 15%, it's like that's all the gains that used to come from like QE2, that those gains were spread out over months or even years. And so now we've picked up all of those gains in three and a half months. So that's what I mean by the front running. And, the U.S. Stock market is around $34 trillion. And globally, it's about 100 trillion for all markets. The Fed's policy is like 60 billion a month. Now, wait a minute. And so I did a chart and I showed that that's actually just like a tiny little square. And so you have to ask, can 60 billion a month really move $100 trillion markets? It's kind of like saying, well, we're gonna throw a couple of coins in something and it's gonna go up by thousands of dollars. I mean, so I think it's what my point here was. It's a psychological trick, really. That's what the Fed is doing. Is we're saying, well, we're going to stimulate and print more money, and then that's going to create this huge rise in stocks. But it's not actually from the Fed's money. It's from the psychology of front running the Fed's decision. So, but that kind of psychology runs, into barriers too, because if the Fed money actually doesn't come into the market in sufficient quantity to actually, fulfill those promises, well, then, the psychology will reverse. And interestingly enough, Patrick, if you look at the Fed balance sheet, it hasn't gone anywhere in a month. It was 4.165 trillion on Christmas Day, and today it's 4.145 or something. It's actually 10 or 20 billion less. So I also think the Fed may be realizing that they've created a monster here, and so they're actually not expanding their balance sheet as they promised. They're actually keeping it flat, and I think because they realize they've created a runaway asset bubble that will pop, and that would be very destructive.
Yeah, I was looking at sometime around March or first quarter this year that the Fed will be right back where they were as far as that the balance sheet. But they say markets can stay irrational longer than they can stay solvent. Given that we have never witnessed credit creation of such scale in human history, is it possible that the Fed is able to keep this anemic, sluggish economic state going for the next, let's say, decade, or do you expect all this madness to come to head pretty soon?
Yeah, it's a great question, Patrick. And so we know the Fed can print trillions or create it out of thin air, right? And so a lot of people are anticipating that they see the social unrest, they see the wealth inequality, and so they're saying, well, let's do universal basic income, right? And so the idea would be the government borrows trillions and gives it away, at $1,000 per person or whatever the policy is, and then the Federal Reserve would print money and buy the government debt, right? And so that's what a lot of people anticipate, and I can say that would be one sort of quick fix to the problem of inequality, right? Is for the Fed to print money, buy the government debt, and the government give everybody $1,000 a month. That would sort of support spending. But so then the question is, how long can you run that game? How long can you run that game before you start destroying your money in terms of its purchasing power? Because you're creating more money, but you're not creating more goods and services. So, and historically, that leads to a decline in the value of the purchasing power of the money. Yeah. So that's the crisis they'll create if they do monetize debt to pay universal basic income.
Okay. What other ways do you think there may be a way out from the troubles that you've mentioned besides giving people vouchers or things like that?
Well, ideally, we would go back to a system that allowed competition and impose like restrictions on cartels or break up monopolies. That would be the classic capitalist approach to the problem of cartels and monopolies, and then get rid of the Fed or severely limit it. So that it's only a lender of last resort. But if we don't do that, then I think it boils down to individuals looking for other kind of protection against a loss of purchasing power of the currencies, right? So that's why I think we're seeing renewed interest in the precious metals, and why cryptocurrencies like Bitcoin are also seeing renewed interest, as people, I think, are sensing they cannot trust the central bank's management of the money supply.
Okay. Since you mentioned gold, along with crypto, given the issues in the U.S., should people start to consider the possibility of changing the jurisdictions, or at least park some of their wealth in other places, perhaps outside the U.S. that has a safer jurisdiction?
Yeah, it's a good question, Patrick. And, as we all know, the federal government basically considers every American's assets as taxable wherever they are in the world. And so we have to follow those rules. But, diversification is a critical investment strategy, right? In other words, you don't want to leave all your eggs in one basket. And so diversification across assets and across geography is kind of just like sound policy, right? And this is why, I mean, one of my kind of core ideas about, managing our risk going forward is look at what the super wealthy are doing and then consider following them, because they're the ones with the most money, the most expert advice, the most legal advice, and so on. And so you read these stories about the wealthy people starting to hoard Bitcoin and cash in Switzerland, and the rise of gold and silver as hedges. And so if the rich are doing this, then we ought to all look at that too, because they didn't get rich being dumb.
No, they didn't. No, they didn't. Charles Hugh Smith, before we wrap up, can you let our listeners know more about your work and the Of Two Minds blog?
Yeah, please visit me at of2minds.com. You can download free chapters of my most recent books and take a look at my archives. Everything's free. And I really appreciate the interview, Patrick, and your terrific questions.
Thanks, Charles. We appreciate you being here and joining us again. Anything else you would like people to know for this upcoming year, or what they should perhaps be thinking of or considering?
Well, Patrick, what I'm concerned about is the high level of complacency. People seem to trust or they believe the system's going to just kind of keep running on trend, and that nothing untoward or no risk will arise that could change their employment, their wealth and income picture. And I think we're entering a period of time where there's going to be a lot of risk that may now be under the surface or hidden. But if it comes to the surface, we're going to have to be able to respond. So, we all need to plan and say, well, if everything stays on trend, that's fine. But if it doesn't, then what am I going to do? And I think planning ahead is I think, key for 2020.
Right. And I think in our first interview, you mentioned we should be developing ourselves as well.
Yes. Yeah, exactly. So that's a good two-pronged approach. Develop Plan B and Plan C, and also develop our own sense of internal security as well as financial security.
Again, we appreciate the time that you've given us, and we do wish you all the best this coming new year.
Thank you so much, Patrick, and happy New Year, happy Lunar New Year to you and your crew.
That was Charles Hugh Smith, editor of Two Minds blog. For more of his insights on the global economy, please visit www.of2minds.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.